General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. It's Wednesday, so we gotta do the midweek check-in. The anchor point status. Monday looked like it'll still hold for NASDAQ. I looked at other markets. NVIDIA, SPY's all dropping, so we'll see how it recovers. But there's a good chance it still holds. Adjust weekly bias template, soft bias NF week or NFP week, so don't really hold on trying to predict everything for NFP. Shifts in framework hit rate. New York has been a lot smoother if we remember them weeks before. Today was kind of wicky, but usually it's kind of messed up. It's starting to get better. Case studies, no case studies, time frame, first week of the month. I'm looking for the Judas, the wick of the monthly candle form. Right now we kind of sideways. We got a big month last month, so we waiting on NFP. Expansion mitigation signals. We chopping in a large range. We're not really going nowhere. Decision quality. Decision quality has been better since I'm getting more setup minded. I'm waiting for clarity and time of day and date type. Narrative framework and accuracy good since I'm not looking for the sale no more. I'm just trading what price is doing now. Experience success, showing up, doing the boring stuff, and keeping myself accountable. Case studies, none. Go Wednesday journal entry. Just tomorrow. Initial jobless claims, okay. No, here we go. ISM, manufacturing, PMI. Okay. So today was manipulation, engaged, confidence level medium, conditions confirmed, all that good stuff. 15-minute chart. New York was crazy. ADP pushed us down. And then 10 o'clock was something else. I think it was like PMI or something. Pushed us up. It wasn't that bad. This open range gap kind of rejected us, and then AVGO earnings pushed us down right here. We tried to bounce. Ugly day, but the start of the nonsense before NFP and AVGO reported earnings. So job, the ADP employment, actual 122, expected a little bit higher than expected. Private sector hiring remains resilient. Healthcare, education, transportation, finance, and construction contributed to the gains. Strongest ADP print in about 16 months. So there goes the jobs. I'm trying to see where every time they update, they do a little something different to this menu. Boom, boom, bullish, bearish for bonds. Yeah. ISM PMI, actual 54, previous 53, above 50 is expansion. So U.S. service economy accelerated in May, new orders increased, and business continue expanding. Prices paid. So this inflation is rising. You know, so producers are getting more done. We're expanding more, but we're also paying more for stuff and jobs. Everybody got jobs. Broadcom reported a very strong quarter overall, but the stock initially traded lower after earnings because expectations had become extremely high. All right, revenue 22 billion. It's up 48%, up 143% year over year. That's amazing. So the numbers themselves were bullish. The negative price reaction looked more like a case of expectations being too high rather than a weak report. Infrastructure spending from companies like Meta and other hyperscalers still appear extremely strong. So Meta is giving them money. On the H1 chart, this is when we had that earnings sell off, but we didn't get no daily low or anything. I like this internal range liquidity pool target. Then I was saying if we close below this new week opening gap and flip it, that's a good sign. We can look for maybe a retracement to previous month's EQ. Let's take a look at the daily. Previous month's EQs right here. We got that volume imbalance above. So if we flip that new week opening gap, we got us some targets. Volume imbalance, EQ, SPX. Check this out. Way more selling. So the good news that pushed Nasdaq up. Hold on. Okay. Yeah, it's obvious S&T. Yeah. I like this Thursday, 72 or 75.25. Selling retracements. And we flipped this new week opening gap here. Any type of retracement, I'll be looking, really watching this because we already got previous week's EQ over here. So NASDAQ is technically the sixth sister. Broke out of this 2-day range, very close to this volume imbalance. And take a look at the stocks though. We haven't even hit EQ. This is SPY. Basically the same thing. And we closed the book below 3 daily lows. That's a big deal. QQQ, not closing below nothing. Respecting previous month's high. Then Nvidia. So Nvidia and SPY sold off. Nasdaq didn't. So it's IPO time. Engagement. This is a Model 12 ICT price action model. Right at opening range gap 50% and first fair value gap. A lot of influence there. So cut out at the order block. Model 12 followed the plan and acted on the edge even though the ATR was wild. It just reduced the risk. It's just scary. Got it done. Did the framework play out? Yep. What did we learn? Stick to the plan, 1% a day, and stay focused on the process. What we watch for tomorrow, chop day before NFP, can be dangerous, so may take the day off if I don't see nothing super obvious. Or just not look at exotics or something not NASDAQ. All right, that's all the work for today. Y'all have a good day. Peace.